Good afternoon. Before we dive into a new week, let's hit rewind and recap the major financial news from around the globe that shaped the past week. The European Union's competition watchdog is poised to block Amazon's proposed $1.4 billion acquisition of iRobot, the maker of Roomba robot vacuums, as reported by the Wall Street Journal. This news has led to a significant 36% drop in iRobot's shares in pre-market trading. Amazon, a major U.S. tech company, is facing scrutiny from the European Commission for concerns that the acquisition might restrict competition in the robotic vacuum cleaner market. Despite the January 10th deadline, Amazon has not proposed any remedies to address these antitrust concerns. Critics of the Commission's stance, such as Matt Schruers from the Computer and Communications Industry Association, argue that blocking the deal could ironically reduce competition and limit consumer choices. Announced in August 2022, Amazon's intent to acquire iRobot is part of its strategy to expand its portfolio of smart home devices. The European Commission has a deadline of February 14th to make a final decision on whether to approve or reject the acquisition. Apple Inc. is set to launch its highly anticipated Vision Pro mixed reality headset, with pre-orders starting on Friday for the $3,499 device, marking Apple's entry into a new product category since 2015. The headset, which combines virtual and augmented reality with dual 4K displays, requires customers to use an iPhone or iPad for a head scan and vision prescription, emphasizing a personalized fitting experience. Despite Wall Street analysts predicting a modest start with an estimated 300,000 to 400,000 units expected to ship this year, Apple insiders anticipate a strong initial response. The device, primarily targeted at the U.S. market initially, has faced production challenges but is expected to meet initial demand. However, the Vision Pro's high price and lack of support from major streaming apps like Netflix and Spotify may impact its broader appeal. Apple's design focus has been on creating an immersive experience without feeling enclosed, featuring the EyeSight system that allows others to see the wearer's eyes and an interface controlled by eye movement and hand gestures, potentially revolutionizing remote collaboration. Spirit Airlines is facing significant financial challenges following a federal judge's decision to block its merger with JetBlue, a move that would have valued Spirit at nearly $4 billion. This ruling leaves Spirit in a difficult position as it confronts potential recession pressures, mounting debts of approximately $1.1 billion due in 2025, and operational challenges including grounded planes due to engine issues. With soaring interest rates, refinancing this debt becomes increasingly challenging. The airline's stock value has plummeted over 70% since the judge's decision, intensifying investor concerns about possible bankruptcy, which could address the debt problem, but also potentially wipe out equity holders. Spirit is now considering its options with advisors, as reported by the Wall Street Journal. The current high demand for aircraft, coupled with production difficulties faced by Boeing and Airbus, means that Spirit has limited leverage in negotiations with creditors. The future of Spirit Airlines remains uncertain, with significant risks that may deter investors unless the airline can find alternative strategies for raising cash or revitalizing its merger plans. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.